Hi guys, welcome back to my YouTube channel. My name is Olga Donchecko. I'm a seasoned agent with Cohen Homes and Estates. Today, I'm excited to welcome my long-term friend and an exceptional knowledgeable mortgage professional, Elan Weintraub. He is a co-founder of Mortgage Outlet. You've been in the business for over a decade, and I know on an annual basis you fund, correct me if I'm wrong, over $1 billion worth of mortgages.
Yeah, around $1 billion. It's crazy.
I can congratulate you on
Thank
numerous
you.
awards, and I often see you on CP24 and other news outlets providing your professional advice. So I'm glad that you found the time to come onto my YouTube channel and give us your professional advice. So why don't I start off with a question that everybody wants to ask today.
Sure.
With the number of consecutive interest rate drops we've experienced,
Yes.
what's your short-term and long-term take on that? Like, what can we expect?
I think that it's actually a very murky time right now. 3-4 months ago, they were saying rates will go down, the rates will go down, which they have.
Yep.
But now, as a matter of fact, fairly recently, National Bank is predicting rates will go up a little bit. And I think the challenge and the murkiness is you have a new US president, there's going to be a new Canadian prime minister, there's tariffs, there's all this stuff. So there really is a lot of uncertainty, and buyers and borrowers really need to think about their position, the advantages and the disadvantages about whether they go fixed or variable. I think in this year, I do think we'll see 1 or 2 rate drops. I think the bigger question is 2 or 3 or 4 years from now, how will rates change over time?
And do you think we've seen the impact of the interest drops that we've seen the government announce over the last few months? Or there's a few more months for us to wait and see how things are going to unfold?
I think buyers and borrowers are starting to realize that rates are lower, but I think that there's going to be some momentum, and if rates drop, next week and in the coming months, that will fuel more interest. Toronto, Vancouver, larger cities, they're very interest rate sensitive, and a year and a half ago, a lot of people were at 5.8, 6, 6.2, and now they're in the 4s. That's a massive difference, and it's also a regression to a more of a normal level of rates. So I do think that there's some momentum, and the momentum will build.
Right. And on the real estate side, we are seeing a lot more activity coming in, maybe not as many transactions happening, but still there's quite an uptick in demand. At least people are coming out to see properties, and they're starting to consider purchases, as opposed to maybe even 3 months ago when they were sitting on the sidelines and just waiting.
Yeah.
Talking about buying process, what would be your recommendation for the frustrated and overwhelmed first-time home buyers?
Yeah, I think Toronto is not an easy city to buy in. I think you need to do a lot of work up front and frankly, get your financing in order.
Right.
You need to understand how much you can borrow, what your monthly payments will be. Can you afford it? On a very long-term level, though, I do think Toronto real estate is a very good investment, but it's not something that you're buying if you're going to change your mind in 3, 6, 12 months. It really does need to be an investment that you make with a long-term time horizon in mind.
Especially if it's a first-time home buyer, I always recommend that you should be looking at this as a long-term property for you to be able to enjoy. And if things unfold sooner, then great. That's going to be a bonus. If not, then you're prepared to wait for it. Because I feel like a lot of the first-time home buyers, they might not necessarily be able to go right away into their dream home at the time.
Yeah.
So there's maybe some inconveniences, but they're doing the right thing for getting into the market. And
Yeah,
starting.
so I think it was Warren Buffett that said, be greedy when other people are fearful, and be fearful when other people are greedy. Right now, as far as I know, you'd know this better, condos are pretty cold.
Yep.
And if I'm a first-time buyer, I'm probably looking at a condo. And if the seller is desperate and rates are coming down, to me, that represents a good opportunity. And again, it's like everyone is fearful. People are scared to buy condos. Would you rather be buying 3 years ago when there were 14 offers on the condo?
Yep.
Or would you rather negotiate the closing date you want, the terms you want, the price you want? Again, with that mid or long-term time horizon, I think it's a much better time to buy now.
And from your professional opinion, have you seen there to be any trend whether a first-time home buyer gets qualified easier or better by buying a condo versus maybe a detached or a freehold property, or there's no difference in that
There
regard?
isn't really a huge difference. If there's very expensive condo fees, that might play in. But generally speaking, if it's like let's say $1 million condo or $1 million freehold, it's probably going to be the similar kind of impact. But on a related note, there's been a lot of mortgage rules changes that impact first-time buyers. So it used to be that if you had less than 20% down, the maximum purchase price would be $999,999. So if you had like 10% down, that was your maximum purchase price. And by the way, I'm very neurotic and nerdy about mortgages. At the time, it was not $1 million; it was 999,999.
So $1 under $1
A
million.
dollar under. No, and I'll tell you
Yeah.
why. Because, and again, I work with a lot of realtors and I really try to educate my clients. If you give me a purchase agreement for $1 million and you have 10% down, I would say, thank you very much. Please get an amendment for $1, because that's the law.
Right.
Now, the law has changed. Now you can go to $1,499,999, not $1.5 million.
Right.
And you can have less than 20% down. You can also do a 30-year amortization as a first-time buyer, which has three big impacts. Number one, you're going to have a lower monthly payment with a 30-year am. Number two, you're going to be able to borrow more money. Those are like the main two things. And there's some, maybe make it easier to qualify. So definitely there's a lot of new mortgage changes, even in the last 2 to 3 months, that really help first-time buyers get in the market.
And with the lower prices that are on the market right now,
Yeah.
I feel like all the signs are there for first-time home buyers to enter the market and use this opportunity to buy their first home.
Yeah, as long as you're, again, like going to be there for at least a couple years, I would personally buy right now.
Perfect.
Yeah. Actually, I'm going to be very specific. What I would do, I would buy right now, but I would try to set the closing date for 90 days, maybe 120 days. So you get the price today, but if the prices or if the rates drop in a week and then again in a month or two, you're going to be able to get the lower rate, but you're getting today's prices. If you buy 3-4 months from now and there's been a couple of rate drops and the market heats up, all of a sudden now you're competing with 2, 3, 4, 5 buyers. Whereas today you're able to negotiate a much better price with a seller.
And essentially, by the time you close, there is a high chance you already made a profit on your
yeah,
purchase.
yeah, that's true. Yeah.
Would you say there's any new rules around refinancing? Are there any beneficial options out there for somebody who is considering to refinance their property?
So there's always new mortgage products and rules, but there's a new one that just launched a few days ago. It's brand new, and it's so new that some of the banks haven't even implemented it. But it's a new rule that you can refinance up to 90% of the future value of your home if you're adding a secondary suite or a secondary unit, like an auxiliary home. And the premise behind it is, we want more housing. We want to make housing more affordable. So the government is making it easier for homeowners to borrow money in order to build more housing. And this is brand new. Again, I'm getting a lot of questions about this, and I have very few answers because the banks and all the various lenders haven't even had the time to build policies and IT and all of that for it. But it could have a really big impact on people.
And it sounds like just with the carrying costs and it being more expensive for people to carry property, having a rentable income would be also something of an interest to them. So it sounds like this would be a product that would have high demand.
Yeah.
And I think also with the government pushing for affordability or increased in units available for rent, this is another reason why it might be a good product to have and have available for buyers.
Yeah, and again, if you're renovating your home and maybe you're putting in a basement apartment, or you're planning to, convert an exterior detached garage into a garden suite, I mean, this program might be amazing for you.
For sure.
Because it gives you access to, number one, more money and also cheaper money than if you were doing it in a more traditional setting. Like, this is essentially the government subsidizing these secondary homes on the same property.
Exactly, because I've at least a lot of the clients I worked with who wanted to do like a rentable suite or a laneway suite, a lot of the time they would have to go to a B lender or even a private
That's
lender
right.
in order to be able to get a mortgage. So this sounds like something that they would be able to qualify and get through a traditional bank
That's right.
and
Yeah.
essentially have cheaper.
And they would have very
cheaper
good
payments.
rates. Yeah. Payments rates. They would get more money because a private lender is not going to lend you 90%,
No.
but the government and the bank will.
So thinking about refinancing your existing property, I hear this a lot from my clients. Hey, we've been here for a few years.
Yeah.
We're growing out of the house, but we don't know. Do we refinance and perhaps renovate or extend our current
Sure.
home? Or should we just move to a brand new house, get ourselves a bigger mortgage? What's your recommendation?
So I'll speak for myself. I do believe that everyone, has their own story. But I think renovations are very difficult. And again, the profile of someone who might be renovating might be, a married couple, both, younger kids with an active career. Renovating a home is an incredible amount of work, time, stress, even if you have a great builder, a great designer, a great realtor, all of these things. So when you renovate, it's going to distract you from taking your kids to hockey, doing extra meetings, whatever it is. Now, I just went through a reno, and again, this is the stereotype or the common sense where everyone knows this. My renovation went over time, over budget, and again, it was all my fault, but if you don't have the financial strength to deal with that, and again, I was renting, my landlord was very cool. He let me stay longer. But renovating is a massive, massive undertaking that, again, if you're a career, kids, this and that, I think you just sell
Just
and
buy,
buy and, let someone else worry about it.
For sure. Buy someone else's renovation.
That's right. Or, and again, like we could do a whole thing about all the mistakes I made with renovating, but like scope creep, slippery slope. It's like, well, I'm doing this, I might as well do this. And this is going to take, like, it's just a massive undertaking. So, for me personally, I highly recommend buying and selling. But again, maybe someone is a designer and they want it exactly the way that they want it, right? So there's always nuances. The other answer to your question, which is a little bit different, strictly on the refinance side, I'm getting a lot of calls from people that got their mortgage a year ago, and rates a year ago were 5.8, 6, 6.2. And basically, I do a full analysis for them, and I say, you know what, Olga? There's a $9,000 penalty to break your mortgage, but you're going to save $28,000 to do it. And it's like the best $9,000 you can spend. So a lot of people are refinancing, getting rid of their old mortgage, getting a lower monthly payment, a lower rate, saving tons of money. So that's actually a very big trend in refinancing right now.
So if you were to go for a refinance, or let's say you're buying a house and going for a new mortgage, what would you recommend, fixed or variable rates?
So I'm a big believer in the word psychographics. And to me, what that means is, how are people's attitudes? How are people's, personal feelings? So if I recommend variable to you, and for the next 5 years, you're going to be watching the news every day, are rates going up, are rates going down, and you're going to be texting me.
Yeah.
That's not a good, even if it's cheaper, if you're going to be stressed for the next 5 years, it's not a good solution.
Right.
Now, I have a very funny story, which is, I have clients, they both work for banks. They're both economists at different banks. And the wife wanted fixed and the husband wanted variable, or vice versa. The point is that professionals in the exact same scenario couldn't even agree on what to do. But if you're asking my opinion, in general, I do like the 3-year fixed right now, not variable. I'm getting a lot of questions about variable. The reason I don't like variable is I do think rates are going to go down. Now, maybe you save 5,000, 10,000 if rates go down. But again, there's talk, National Bank, Trump, Trudeau, tariffs, all these things, that what if rates go up? And if you can save $10,000, but if you're wrong and rates go up and you pay $15,000 more, that's actually disproportional risk. So to me, the 3-year, I actually call it the Goldilocks mortgage, which is it's not too hot, it's not too cold, it's not too long, it's not too short. You know, Goldilocks, the porridge is too hot, too cold. So 3 years, you kick the can down the road, and let's see what happens 3 years from now. I don't recommend the 5-year fixed.
Okay.
I think that's too long. There are certain people, they really want the variable. And again, it's the client decides what's best for them. Personally, I think there's some risk. And let me be very clear. If we rewind 3, 4, 5 years ago, all of the experts, the Bank of Canada, the chief economists, they were all saying rates will be low for a long time. Rates will be low for a long time. And then they skyrocketed.
Yeah.
So even all of these experts, these forecasters, these economists, they all got it wrong. So personally, I like the 3-year.
I'm with you. I think that's a good enough term. Even if we look in terms of real estate, I feel like on average, people move every 3 years. So it's just the right amount of time for you to go through some life changes, right? I don't know, maybe get promotion at work and be able to move into the next category of a mortgage or a next category of purchase. Is there anything that you can recommend for investors? Because I feel like from my standpoint, investors have been pulling out of the market, or maybe they've been squeezed out of the market. Is there a positive light down the road for investors?
There are a few things. So the first thing is, I think if you're an investor, you need to have a little bit of fat. So what I mean by that, and I think you were saying your father uses that expression. If you're an investor and you're spending your last nickel on real estate, that is not a good idea. You need to have worst case scenario. You have a tenant, the tenant stops paying you, and this happens. You need to have some strength. So that's like level one. A couple areas that I really like is obviously the laws have changed with respect to you can build a fourplex in Toronto now, and you can put a garden suite or like an auxiliary suite. You can build 5 dwellings on a single property. So I do think for the right investor, if you have the knowledge, it's not just something, I'm going to invest in real estate and buy a house and tear it down and build a fourplex. But if you have the right people, the right resources, I do like the opportunity of building a fourplex. You can either keep it and generate the cash flow, or you can flip it and do it again. Maybe even buying 2 properties and doing like an 8plex or whatever it is. So I do like that play. I think that if you have a medium or long-term time horizon, buying a house or let's talk about a house. You buy a house, maybe it's a bungalow, maybe it's a little bit kind of ugly. You throw $30,000, put a coat of paint on it, and you keep it with an option value. And what I mean by option value is you buy good real estate, and 2, 3, 4 years from now, you're renting it out. 2, 3, 4 years from now, then you look at tearing it down. Then you look at building that fourplex. So I like real estate that has an option value where you're going to generate a little bit of cash. You're probably going to lose a little bit of money every month, but then your payout in 2, 3, 4, 5 years is in the hundreds of thousands. And you either flip it as a shovel-ready project, or you go ahead, do all the construction, and then rent it out or sell.
For sure. I always tell my investor clients that don't look just at the cash flow when you're buying an investment property. Look at the equity growth. So you have to take everything into account. So yes, the cash flow you might be out of pocket $300, $500 every month, for example. But if in 2-3 years you've made $300,000 on the equity growth, then you were actually in the plus.
Yeah, and that's how I describe Toronto real estate, is that in my mind, you lose $300, $500, $1,000 a month. Every single month, minus 1,000, minus 1,000, minus 1,000. And then 4 years from now, you make your 300, 400, 500 net in a sort of capital gain kind of environment.
For sure.
Toronto is not a cash flow city.
Not at all.
Yeah.
I couldn't agree more. Yeah. What would be the most common or maybe the biggest mistake you've seen from your clients who come to apply for a mortgage?
Ooh, okay. There's a lot of mistakes. 80% of it is just talking with a competent mortgage broker before you start signing paperwork. If the process is get your mortgage organized, get your financing in order, and then buy, not the other way around.
Right.
But there's one specific mistake now that's really, really harsh. And that is people that bought new construction. And people, maybe they bought a condo in 2021,
Right.
you know, 1,500 a foot, 1,800 a foot. You know, now the condo's ready. The builder says, hey, give me my $1 million. 5 years has passed, condo's ready. Now, the big mistake, and this is very important, when that person signed that paperwork 5 years ago, if that person would have come to me 5 years ago, there are mortgages that you lock in 2021. You lock in the rate, you lock in, you know, your credit score, you lock in the appraisal. So 5 years goes by, your mortgage is done. You don't need to do anything.
Right.
So if someone would have signed that mortgage 5 years earlier, they would have had a rate of, you know, 1.79. They wouldn't need an appraisal. Everything would have been done. But people don't bother with that, and they're like, "Don't worry, I'll buy the place in 5 years." The problem was that new construction always went up and up and up. So you paid $800,000 and you sold it for 1.1. You paid, you know, $400,000, you sold it for $8 million. You didn't need to worry about a mortgage. Now the appraisals are coming in light,
And reverse.
that's right. And someone that would have signed that paperwork 4 or 5 years ago, they would have been fine.
Yep.
So that's one that has catastrophic results.
For sure. And
Yeah.
I actually have so many people reaching out to me
Yes.
with a similar scenario. It's
Yeah.
unfortunate, but it's a similar scenario where, hey, I bought pre-construction.
Yeah.
I'm closing in the next 3, 4, 5, 6 months.
Yeah.
And, you know, I bought 1,500 a foot. It now doesn't even assign at 1,000 a foot.
That's right.
You know, I'm a 500,000 in discrepancy here on my purchase. What do I do? How do I
Yeah.
get out? And there's some creative ways, but at the end of the day, they're
Yeah.
stuck trying to come up with that 30-40% discrepancy.
Yeah. And it's funny. There's some people that blame the builders, and I'm not necessarily pro builder or pro individual, but if you bought a property and you signed an agreement and you went through it with your lawyer and you agreed to pay the builder $1 million, and then 5 years goes by and they say, hey, give me my $1 million. Like, if that property was worth $2 million, you wouldn't go to the builder. The builder
Not at
wouldn't say,
all.
give me my profit.
Yeah.
So if it went down, like, you took the risk, right? So when prices were skyrocketing, the builders weren't going to the buyers and saying, hey, give me money back.
For sure.
So it's, unfortunately, some people got caught pretty hard.
And I think we will be seeing the impact of that over the next even year.
Yes.
And this is already kind of showing with the heightened inventory of condos available on the market right now.
Yeah.
But I feel like for those people who are thinking, as we just talked about investors, you know, people who are thinking long term, maybe there's kids that are growing up and they're going to be starting college in the next 2-3 years. It's a perfect time right now to buy that extra, you know, secondary property if it's a condo.
And the interesting thing is, right now, new construction is dead.
Yeah.
So builders are not building. So, and I think what's going to happen is there's going to be some pain in the short term, right? So I do think it's a good time. But 3-4 years from now, there's going to be no new product coming online. There's going to be no new construction. And people are going to be like, I want to buy a condo. I want to, you know, start my life, whatever it is. And all of those people that bought today, there's not going to be new competing units coming on board.
No, not at all.
So,
I'm with you. Yeah.
Yeah.
I think that the inventory will be accumulated within the next 2-3 years.
That's right.
And then we're going to be in the pickle where it's going to be a bidding war again.
Because nothing is being built. Nothing.
Nope.
All the condo sales centers, new construction, they're shut.
And there's a lot of purpose-built rental projects coming up, but not the actual condos. So that's the other thing. It's more like there's going to be an oversaturation of the rental market, but not necessarily enough product for people to purchase.
I think that, again, if you got, it's incredibly difficult to time the bottom, which is why, again, whether you've got that medium to long-term time horizon, I think that's the key thing. A lot of banks, frankly, advertise a quick and easy pre-approval. 60 seconds, pre-qualify, whatever it is. And that's actually one of the biggest mistakes that a buyer or borrower can make. getting a mortgage is like getting a knee surgery, and you need your income, your credit, your down payment. There's so many ways that a mortgage can fall apart. And I really try to understand from a consumer point of view, from a realtor point of view, why is this so hard? But there are money laundering laws, there are income laws, there are auditors, there's all these things. And if you get a pre-approval in 60 seconds, my advice to you is run the other way. You want someone that asks you a million questions. Oh, I forgot to, and this is what it is. I forgot to tell you, I went to the United States for my MBA and I owe $100,000 in student loans. Right. I forgot to tell you, I co-signed for my sister's car loan. I forgot to tell you, I'm divorced and I have child support. So all of these I forgot to tell yous, they have massive impacts. Now, what I tell my clients is, in the real world, it doesn't matter. But in the mortgage world, it does. It's like, and even realtors in the last few years, a lot of them incorporated because the laws changed. So they were a small business owner and now they're incorporated. There are some banks that love that and some banks that hate that. And if you work with a bank that hates that and they kind of figure it out kind of a week before closing, that's really bad. For sure. So the number one enemy of a mortgage and a mortgage broker is a surprise. So you know what I'm asking my clients now? Where's the down payment coming from? Is it in Bitcoin? Is it in cryptocurrency? Right. Banks hate that. Is it coming from a sanctioned country? There are some countries, you know, the money comes in and it's like, we're not touching that. For sure. And again, you can be pre-approved. You have perfect credit, perfect income, perfect property, perfect. And the money comes in. You know, I had a client, the money was coming in from Brazil. And we were working with a bank and their rule was the money has to be in Canada 30 days before closing. And I promise you, I told my client this 27 times in writing and verbally. And sure enough, the money came in 26 days to closing and the bank canceled the file. So it's all about, you know, understanding the down payment, understanding the income, understanding the property. Is it clean? Is it livable? Did you pay a fair price? The lens that I would overlay is if I rewind 30 years ago, you know, Uncle Joey worked at the Chrysler plant and Aunt Susie was a nurse. Clean income, full-time jobs. Now we have the gig economy, we have the sharing economy. I drive Uber and I have a corporation and my corporation pays my wife, but my wife pays me back. Like people are adapting, but banks are like, what do you mean? Like they're like, I like nurses, I like teachers. So if you go to the wrong lender and they don't understand or they're not built that way, everything falls apart. So it's my little rant, but it is this thing of like, get a pre-approval. If your broker is not asking you for 1 million documents, you have to run the other way.
Are there any mistakes that people do between buying the property and closing on the property?
Yes. Oh, that's a great question. So, I mean, there's a few things like people quit their jobs, people lease or buy new cars and take on new debt. A crazy one here, I'll say this with a little bit of humor to illustrate, but they get all new furniture at Leon's. Don't pay a cent of that. You're not paying for 3 years, but Leon's will put something on your credit bureau that says, oh, this guy bought $17,000 worth of furniture. So don't quit your job. Don't start transferring around money. I'm transferring all this money. Don't lease a new car. Don't like all of these things that, as I talk about it, they're pretty obvious, but sometimes, you know, like it's just like, oh, I quit my job and I'm actually working for the same company, but instead of being a direct employee, I'm invoicing them as a corporation, so I'm actually making more money. And in the real world, that's fantastic, but in the banking and mortgage world, they're like, you're newly self-employed. I once had a client, I mean, I could talk about this forever, but he was a senior vice president at a big accounting firm, and he got promoted to partner in the process of our sort of pre-approval. And the problem when you're becoming a partner is you're no longer an employee. You're a part owner. And not only are you part owner, you have to buy into the partnership. Right. So he had to take a $400,000 line of credit to become a partner. So it's like now you're no longer an employee and you have a $400,000 debt that we never talked about. And so all of these little things, I mean, he's a partner. This is fantastic. It's a very amazing business track, but again, no surprises. That's the main thing.
It's interesting. You say how obvious it is, and then how many times people actually go ahead and do it.
Yeah.
You'll be surprised.
And again, I mean, knock on wood, I really try to brief my clients, but in the real world, again, I tell my clients it's like going through airport security. You take off your belt, you take off your shoes, they throw out your bottle of water. You can complain about it, but if you want to get to Miami, if you want to get to Vegas or Europe or wherever you're going, you're taking off your belt, you're taking off your shoes, they're throwing out your water. Yep. Right? That's just part of the process. And then you can enjoy your vacation after.
You just have to go through the process.
You get the fun stuff of the beautiful homes. I get the, the nitty gritty. But again, that's, I'll tell you, I look at mortgages like a Rubik's Cube sometimes. And that's actually one of the parts of the job that I love is that, a teacher married to a nurse, it's very simple and that's fine. But sometimes it's my house didn't sell and I'm buying a new construction in a year and this and that. And actually I like that because that's the complexity and the Rubik's Cube. So
and how many pieces need to fall into place, right? For the whole thing to work out.
And that's exactly what it is because it's like dominoes.
Yep. Step
1, do this. Step 2, do this. Step 3, do this. And one of the mistakes that people make is they just go to their bank. They know their bank for 30 years. And the challenge with that is when you go into a BMW dealership, they're only going to sell you a BMW. They're not going to tell you that Audi is on sale. They're not going to tell you, you know what, Olga, you have carpool with 6 kids. You should get a minivan. Right. You know what, Olga, you have a cottage. You should get a Jeep. You know what, Olga, you've worked really hard. You want to reward yourself with a Ferrari. So a BMW dealer is only going to sell you a BMW. And similarly, a bank is only going to sell you their product, which might be a complete mismatch. But if that's all they have, that's all they're going to sell you.
Right. This is why I also recommend a mortgage broker to a lot of my clients when they ask me, especially first-time home buyers, because this is the fastest way and the best way to discover the different options that they have in terms of getting financing.
Absolutely.
What would be I don't know, maybe with something in store for us in the future from Mortgage Outlet? What would be your recommendation maybe for somebody or a new product that you're launching that you can share with us?
Well, so we're actually doing a lot of private lending right now. And that's a bit of a tough one because nobody wants private lending. Right. Private lending is really to help people that are in a jam. It's very expensive. And the way that it's a big growth area for us due to market demand. But the reason I talk about private lending is like an old beat up minivan. And, sometimes you've got your kids' hockey team and they're abusing it or whatever. So sometimes you need an old beat up minivan. But private lending is a tool that we have when the bank says no or when the property doesn't appraise or, we do work with some investors and they look at a house and it's got mold in it and the wiring is bad and the roof is leaking and the bank will look at that and say, we're not lending on that collateral. So we go to a private lender. We lend because we see what the goal is, and they fix it, they renovate it, and then they refinance to a bank. Right. So it's a very specific tool to solve a problem. Or here's another really popular one. I bought a house at 2.7 million. My current house is listed at 1.5. It's not sold. When your house is not sold, you cannot get bridge financing. Right. So a private lender will come in, they'll see what's going on. They'll be like, yeah, I understand what's going on. They'll lend you the money, very expensive, but you get the money, you close on your purchase. Because if you bought that house at 2.5 million, you're obligated, right? You've got a binding agreement. So a private lender will come in, help you get it closed. Then your existing property sells, you get your 1.5, whatever it is. You pay off all the private lending, and then you go back to a bank. So by far, that's one of our biggest growth areas right now.
And so what are some of the private lending rates you're seeing?
So I would say they start at around 7.99 to 8.99, and then they go up from there. It depends if it's a first mortgage or a second mortgage. And then there are fees. So fees would be, depending on the scenario, 2, 3, 4%.
Right.
So if you're borrowing $1 million, again, in that bridge financing, and it's a 2% fee, right off the bat, there's a $20,000 fee.
Yeah.
Now, sometimes the rate doesn't even matter that much. No one wants to pay 8.99, but if it's a 1 or 2 month bridge, it's like, okay, you know what I mean?
Sure.
But if it's just like an indefinite private mortgage, that's where it can become very expensive. But again, if there's a clear problem and a clear solution, a private lender can really help to make sure you're not in breach of contract.
Exactly. I think this is a great tool that maybe a lot of the buyers aren't aware that they can use, especially in a scenario where otherwise they would be defaulting on that 2.7 purchase. And the cost of that would be much more than paying a private than paying a private lender. And I think that they are easier, from my understanding, on the pre-approvals when it comes from.
Well, they only care about collateral.
Yeah.
Right. Actually, I'll tell you something funny, but I have a letter of interest on a $50 million bridal path home.
Okay.
And they need a $25 million private mortgage. And we're like moving it forward. So, and again, this is a bit of a misperception, but even wealthy people, sometimes, their money is locked into their corporation, or their money is locked into a project, or they need to expand their business, or whatever it is. And they don't have the time or the energy to go to a bank and get a sort of bank mortgage.
For sure.
And even wealthy people are coming for private money.
And this is, I think, a great tool. Maybe
Absolutely.
not a lot of people know about it, but it's a great tool to use, especially with those short term, as you mentioned, timelines when you just need to bridge between the purchase and the sale, right?
Actually, I just had a client a couple weeks ago. They bought condos about 7 years ago.
Okay.
So the condos actually went up in value, but they could not qualify for a mortgage. But they paid $500,000 for the condos, and the condos were worth $800,000 today. And their goal was to rent it out and then flip it. And we were able to lend them not based on the purchase price of $500,000. We were able to lend them based on $800,000.
On the value.
So basically, they didn't need to make any monthly payments. They didn't need to pay closing costs. We took care of everything. Obviously, there's fees for it. And in a year, they're going to sell it and pay everything back. And they're going to get a check for $100,000, $200,000, whatever the profit is. Perfect. But they would not have been approved at a sort of bank or credit union type of institution.
Mm-hmm. So for somebody who wants to reach out and consult with you on their individual case, what would be the best way to reach you?
I try to be very active on social media. So LinkedIn, Facebook, Instagram. Oh my God, I'm actually on TikTok, although I'm not great at it. Or just email me at elan@mortgageoutlet.ca, or my cell 647-501-4663. Text is excellent.
Perfect. And I can attest to that. I think I text you even in the middle of the night when there is a situation. And sometimes, honestly, even when we were in negotiations with a client and I needed to get your input in terms of like how we would handle a closing of a particular deal, you were always there. So that's...
Thank you. I like to joke that I work realtor hours, right? The business is not a 9-to-5 business, and that's part of the business. So yeah.
And are you mobile? Do you come out to see clients, or should they rather come see you at the office?
I am mobile, but my kind of joke is my clients never want to see me, because at the end of the day, they need to give me their documents. And once I analyze them, like if you want to meet and talk, like absolutely. I had a client about 2 weeks ago. They had a very complex mortgage and they just felt a little more comfortable, meeting. Mm-hmm. But generally speaking, it's all about the documents. My analogy is, if you needed knee surgery, right? The surgeon needs an X-ray, MRI, CAT scan, EKG, blood pressure, the whole 9 yards. You can go and talk to the surgeon and meet with the surgeon and brainstorm with the surgeon. But until they have all of that information, you're guessing, you're giving generic advice. I don't give generic advice.
For sure.
Yeah.
And you are very knowledgeable. I can attest
I try.
to that.
I try. I love mortgages, so that's what I do.
It's always a pleasure talking to you. Thank you for coming onto the show, onto the YouTube channel.
Thank you.
It's always a pleasure. And I think there's lots of exciting things that everybody can learn from Elan. I'll share information. And if you guys liked it, please subscribe. I'd love for you to follow us. And there's more interesting stuff to come.